Hi guys, welcome back to Forex technical analysis for swing trading. Okay, let's start with the USD index chart as we always do. Here, majority of the market is behaving clearly above the yellow moving average line. So that means the overall trend is up. Market is expected to continue to go up like this. In other words, USD index chart having uptrend means USD is getting stronger overall, and we're gonna look for opportunities to buy USD. Let's write it down. Today is October 23rd, Thursday. USD index trend is up. Our decision is to look for opportunities to buy USD. Okay, so first pair is USD Japan Yen. So as you guys can see, the majority of the price action is happening above the yellow moving average line. Trend is clearly up. So we have up leg, retracement, up leg, retracement. If you guys have been following my videos, when the market retraced around the 50% zone here, that was a really good opportunity to buy USD Japan Yen. If you've watched my USD Japan Yen and bought USD Japan Yen, you have been accumulating nice profit. If you did buy USD Japan Yen, keep the buy position. Just set your stop loss below the local minimum here and set your take profit at the Fibonacci extension. Fibonacci extension 1.618 up there. You will have a really nice 1 to 3 risk and reward ratio about 1 to 3. Nice trade. Okay, let's continue. So me personally, I didn't buy USD Japan Yen. I sold New Zealand dollar USD. That's why I didn't touch. I don't have extra bullets to trade on USD Japan Yen. So okay, so let's continue. So USD Japan Yen trend is up. Leg side seems to be a little bit bigger than expected, but that's okay. It's like it can manifest Fibonacci extension 1.618 down here. So market currently reached about the 50% retracement. If you guys followed with my videos and bought USD Japan Yen, just to keep accumulating the profit. Okay, next USD Canada dollar loonie. So here once again, the majority of the price action is happening above the yellow moving average line. USD is getting stronger against the Canada dollar. So we have up leg, retracement, up leg, up leg, retracement, up leg, retracement. We got nice up leg here. Now market is retracing around 40 to 50% zone here. Now it's a perfect opportunity to buy USD Canada dollar right now if you have extra bullets. I will set my stop loss below the local minimum here, and I will set my take profit at the Fibonacci extension 1.618 up there. So currently market is retracing around the 40% retracement. 40% retracement. You can wait a little bit until market reaches again into 50% retracement, then start buying loonie. So if you feel like you're missing out of the trend, now it's a still 40% zone is a retracement is a still good zone. You can trade, and it is still at the end of the day, it is boils down to your sensitivity to FOMO. So you can still buy USD Canada dollar. If you want to be a little bit safer, you can wait a little bit, let it retrace into 50% zone here, then buy USD Canada dollar. So at this point, no matter what kind of your sensitivity has you towards fear of missing out, I would get ready to buy USD Canada dollar right now. Okay, so let's write it down. USD Canada dollar Trend is up. Market reached the 50% retracement. Currently it is at the 40% retracement. I would, if I had extra bullet, I would buy USD CAD dollar. Now it's really in a good retracement still. Okay, USD Schweizer franc. So here once again, we have the last down leg here, and majority of the candles are hanging out below the yellow moving average line. More than 50% of the down leg is below the yellow moving average line. So at this point, trend is considered to be down. Market could retrace a little bit and continue to go down. In other words, USD is getting weak against the Schweizer franc, which of course conflicts with the overall USD index chart. Since we have conflicting stories, we will not force any trade on USD Schweizer franc. So let's write it down. USD Schweizer franc trend is down, which conflicts with the USD index chart. That's why we're not gonna trade USD Schweizer franc. Okay, Euro USD. So if you guys have followed my previous videos, down leg, retracement, down leg. Now market retraced really nice into 50 to 60% zone here. If you guys have followed my videos, I have been recommending to sell Euro USD once it reaches the 50 to 60% retracement zone here. So if you guys followed my videos, sold Euro USD, great job. Set your stop loss above the local maximum here. Set your take profit at the Fibonacci extension 1.618 down here, and enjoy the accumulating profit on this trade that has a risk and reward ratio of 1 to 3. So keep accumulating profit. Okay, so let's write it down. Euro USD trend is down. Market reached about the 60% zone here. I personally didn't sell Euro USD because I preferred the trade on New Zealand dollar USD. On the New Zealand dollar USD, because New Zealand dollar USD short-term trend aligned even better with the longer-term trend. So that's why I preferred New Zealand dollar USD. So anyway, let's continue. Now we have the Aussie. So here in the Aussie we have down leg, retracement, down leg. Now market is retracing around the 40% retracement. Ideally, I want the market to 50 to 60% zone here, then start selling Aussie. But one thing to notice in the Aussie is that just to see the overall bigger picture, you see market seems to be, even the longer term trend, market seems to be going up, and in the longer term it seems to have uptrend. But usually, of course, we trade the longer term, of course we trade the shorter term trend, which is defined by yellow moving average line, right? But somehow, if the short term trend even aligns with the longer term trend, it's even better trading opportunity. So that's why I refused to Aussie and choose New Zealand dollar USD. So anyway, so if your Aussie is your favorite pair to trade, once it reaches into the 50 to 60% zone, retracement zone here, again, it will still be perfect opportunity to sell Aussie. So it's just, I'm just following my personal preference and choose the New Zealand dollar USD. Okay, let's write it down. Aussie trend is down, and my decision is to wait. Currently market is at 40% retracement. Ideally, I would like to have market retrace at least the 50%. Okay, now my favorite trading pair, New Zealand dollar USD. So here the market is behaving, majority of the candles, price actions are happening below the yellow moving average line. So we got nice down leg, retracement, down leg, retracement. Now market should soon return into original downtrend like this. So here shorter term trend is defined by yellow moving averages clearly down here, and also if we just zoom out a little bit and see the overall picture in this window, market is still overall seems to be going down, right? So when shorter term trend aligns with the bigger longer term trend, it is still even better, even best opportunity. It's better than the best, I would say. So that's why I waited on New Zealand dollar USD. So currently market is hanging around the 40 to 50 retracement zone, and I risked 0.5% of my account selling New Zealand dollar USD. That is still a good zone. I set my take profit stop loss below the local maximum here, and I set my take profit at the Fibonacci extension 1.618 down here. My risk and reward ratio is about the 1 to 2, which is a still good risk and reward ratio. So ideally I could wait the market to retrace even more into 50 to 60% zone here, but so far market has been retracing about the 10 days, and in the Euro USD index chart the market already retraced a lot and seems to be returning into original uptrend. So for that reasons I feel like 40% retracement is enough. So that's why I sold New Zealand dollar USD as of today. New Zealand dollar USD leg size is nice. I sold risking 0.5% of my account at 40% retracement. Overall, New Zealand dollar USD is best looking pair compared to USD Japan yen, Canada dollar, and Euro USD. So as of today, I executed my trade perfectly according to my trading system. Now I just have to wait until my trades hit stop loss or take profit. Alright, thank you guys watching. See you next time.